What's up, everybody? This is Grant, that Cause Artist. Welcome to episode 87 of the Investing in Impact podcast. Today, I'm joined by Dr. Andy Kuper, founder and CEO of LeapFrog Investments, an impact investing firm that has reshaped how global capital could drive profit with purpose. Andy launched LeapFrog in 2007 with a bold vision to invest in companies that deliver essential services like healthcare, financial tools, and climate solutions to underserved communities across Asia and Africa. Today, LeapFrog's portfolio companies reach over 500 million people and support more than 240,000 jobs while delivering impressive financial performance for its LPs. Recognized by Fortune as one of the top 5 companies to change the world, LeapFrog has secured nearly $3 billion in capital commitments from leading global institutions. Under Andy's leadership, the firm has set new standards for impact measurement, transparency, and scale, helping to define what it means to truly align purpose with the performance in private markets. In this episode, Andy shares his journey of founding one of the world's leading impact investing firms, what it takes to drive large-scale financial inclusion and climate resilience, and how LeapFrog continues to lead at the intersection of innovation, growth, and social good. Hope everyone's doing well. Let's dive in. Well, thank you so much, Andy, for joining me today. I've been a follower of LeapFrog for a long time, probably not since 2007, but definitely like early 2010, stuff like that. It was just one of the sort of pioneers in, I would say, impact investing, which a lot of people know the term now, but back in 2007, early 2010s, it wasn't sort of a term that was on top of mind for a lot of people. And so, you and the team, I feel like really propelled that term in a lot of ways. And like you sprinkle in through all your conversations and through the materials that LeapFrog puts out, just really putting the capital markets into impact. And I think that's an awesome trend that I see happening, and it's a good time to I think be an entrepreneur in parts of the world where it might not have been great before. You and the team just raised fund for over $1 billion. Want to go back to the beginning and talk about what you wrote on that napkin in 2007?
Well, it's a pleasure to be here, Grant, and talking to you. They at the time, not only did the term impact investing not exist when I incorporated LeapFrog in January 2007, but people looked at me like I had 2 heads and 4 noses when I said that they could have profit with purpose, which remains our mantra. It remains on the back of every single business card. At the time, people thought that you could either have the ruthless capitalism path for your life, or you could have the Mother Teresa non-profit path. And I just thought that was a false antinomy. I think that it's very clear that there are some amazing businesses that really transform people's lives, and that there was an opportunity to really back those businesses at unprecedented scale. And as you said, and remains our mission, open the gates of the capital markets to purpose-driven businesses. So the real precipitant for that trip to write the napkin idea down was that in January, at the beginning of January 2007, I saw this guy you may have heard of called Steve Jobs launch the iPhone. And while I didn't predict streaming video or TikTok, I did predict that what that meant is that billions of people would join the economy, would be connected to the grid, both communications grid and other kinds of grids, and that create an unprecedented opportunity for businesses to serve a very much larger portion of the world's population. In fact, more than half the world's population live in developing countries and do not have good infrastructure for being reached, but they can be digitally reached. And I thought once the pipes were built out to that population, you would have them have other services, including financial services, which is where I started, served through those pipes. So the idea was, let's go out and raise capital dedicated to those businesses that are serving those emerging consumers, that untapped market. And instead of seeing it as philanthropy, because philanthropy markets and charity are important, but they are very, very small relative to the capital markets. Typically a philanthropy has hundreds of millions, tens of billions at best. You're not talking about the trillions that exist in the capital markets. So the idea was, well, let's access those capital markets, tap that capital to get behind these businesses. The great thing about businesses is because they make profit, they're highly scalable and they can really grow a huge amount. So let's get those huge capital markets behind these businesses that are hyper scalable, and let's reach hundreds of millions or indeed billions of people. And let's achieve profit with purpose, because in order to tap the capital markets, you have to offer a superior commercial proposition. You have to offer risk-adjusted returns that are beyond market rate. And if we can do that, then we've got this machine that's really scalable to influence billions of people's lives.
I want to go back even before LeapFrog, maybe your time at university or right after university. What was that path like before LeapFrog? Take us through that journey a little bit.
So I grew up in apartheid South Africa, and my parents had the courage to send me to the only unsegregated school under apartheid. So I was there with people like Thabo Mandela, and in order to visit friends, I had to violate the Group Areas Act and go to areas where either whites or blacks or others were not allowed. So I had the sense that the world could be very badly structured. And then I was there, as you say, at university. I was there on the day Nelson Mandela was inaugurated on the Union Building lawns in Pretoria.
Wow.
And at that moment where he stepped up, the prisoner had become president. And I had a sense that a small group of people persuading a larger group of people and mobilizing with great determination over a long period of time could fundamentally change the structure of the world. And I remember that moment still, where we were standing 50,000 of us on the Union Building lawns in Pretoria, and we heard this boom. And almost everybody there had been involved in the anti-apartheid struggle. So when you hear a big boom, you hit the ground. Yeah. So 50,000 people basically dropped to the ground. And then we looked up, and there were 6 jets trailing the colors of the new South African flag, saluting Nelson Mandela. And there was a moment where we had this sense of civilian control of the military, of the possibility of things. And everybody started saying, those are our jets. And it was this incredible moment of empowerment of an entire country. And I just had a sense that you could commit your life to something like that. And if you think about it, the capital markets are that badly structured. They're incredibly skewed. They don't work well. They exclude the talents of huge portions of the world's population. They serve vastly less than the full customer base of the world, so much so that they don't even serve half the customer base of the world at all, and the rest pretty inadequately. And so I thought, well, there is the real opportunity to change this. And I had the experience as a person of trying to do it in multiple levels. I worked with various businesses, with Muhammad Yunus, the Nobel laureate for peace, Nobel Prize for Peace, for his work in microfinance, and now eventually is the currently effectively the president of Bangladesh, and also Faisal Abed, who was the founder of Bruck, which did amazing things alongside Grameen to really lift the life expectancy of an entire country by almost 20 years, and then spread the gospel of this economic change around the world. And I had the opportunity also to work in, say, India, where I had successes and failures, by the way, and really saw that people, businesses did not have, and small businesses did not have the backing they needed, as well as large businesses, to really get to where they could go. And so when I was working eventually at Ashoka, which supports as an organization that supports social entrepreneurs around the world, I was a managing director there. I really saw that what was missing was commercial capital to scale things. And while there were small microcredit funds and some work being done in renewables, and there were non-profits supporting market building efforts, there was nothing that had commercial scale. So when I launched LeapFrog, I launched it with CEOs and CIOs who had run multi-billion-dollar managers or companies, and with actuarial training and deep rigor in finance. And we said, let us have an ambitious goal. So we went out and we said, we're going to raise $100 million to start, and we're going to reach through our companies 25 million people, low-income people, with protective financial services. And I will tell you that no one believed initially, virtually. I mean, we're talking about my mother and my wife. And eventually, I got President Clinton behind it, and he launched LeapFrog with us, and we assembled an amazing team, and we together convinced investors like Pierre Midyar from eBay, like Calvert and Axion were early believers, then the development finance institutions, and then some of the largest and most sophisticated institutions in the world eventually got behind it. And we have, of course, smashed way through that original 100 million by, I think we've raised something like 30 times that at this point. And in terms of the number of people reached, we've gone something like that, 30x. The remarkable thing is that original idea is still 100% intact, but the form that it took was really determined by the team, the companies, so much that we couldn't have imagined at the outset.
Do you remember I guess to get to those first investors, and you kind of laid out the pitch a little bit there, but was it the emergence of technology, maybe even beyond just a smartphone, that with, obviously you said capital markets have trillions. Do you remember what you think sparked that yes in a lot of the early investors? Through the story of this, those are some of the most important people is those initial yeses, right? To get to this point.
Absolutely. I have a very soft spot in my heart still for the early believers who took the leap with us. And I will say initially it was probably a ratio of 95 rejections to 5 potential acceptances to about
5 babies.
Yes. So it really was about something, I think, appealing to something deep in the human psyche. I think when we were all offered that profit or purpose world and path, I think a lot of people have a sense that is just a false trade-off. All of us want to accumulate resources for our family. Many of us want to do that by engaging in interesting commerce and activity at the highest level. On the other hand, all of us, I think, want to contribute to our community, want to feel that we're doing something socially valuable. And many of us will leap at the opportunity to do that. And we were being told to do those in completely separate spheres of life.
Yep.
As opposed to naturally pursue that each day or find ways to bring those needs together. So I think we spoke to that deep hunger in people, whether it was President Clinton and Pierre Midyar, the eBay founder, or whether it was the people I got excited or persuading my mother-in-law that this was a good idea, or persuading portfolio companies that we were exactly the right investors for them. That notion came to resonate of profit with purpose, and I think still does, and has come to really be embodied by an entire industry that is impact investing now, that is sitting at $1.57 trillion from basically zero. I think the other thing that got us to yes is worth saying, which is that our timing was spectacularly bad. I mean, people look at me launching LeapFrog with President Clinton and they think all of this was inevitable. But actually, I launched it with him. By the way, I didn't know him from a bar of soap. I'm a farm kid from South Africa. I sort of talked my way up eventually to get him to do this, and he got excited about it. But, it was a week after Lehman collapsed that we launched LeapFrog. So I literally walked out of the event at the Sheraton in New York, and people were carrying their boxes with their stuff from their desks out of the building across the way. And I thought, this is a great time to be launching something completely new in capital markets, in emerging markets, with very different and exciting. This was not the time. But the funny thing was that made us. That bonded us as a group, and we said, we've got to come up with a proposition where if anybody can do it in the world, it's us, where it's utterly compelling and it speaks to something around diversification, around strategy, around a window into the future, as well as around risk-adjusted returns that can really resonate for investors, especially limited partners. So that made us. And, a number of months later, probably 9 months later, we closed the first $42 million of the fund, the first fund. And now it's, I guess, 7 vehicles later, multi-billions. And we do a much wider array than financial services. But the essence of it was to commit to that and to have a team that is so purpose-driven and aligned and best in class. And that has stayed with us throughout our journey.
I know it's a term, impact investing that is thrown around a lot these days. And I try to ask people to, because there's not one definition, which I kind of like, because it means, I think, a little bit something different to maybe everybody that I asked the question to. When you hear impact investing or you try to sort of explain it to somebody that's not, necessarily like a novice in this sort of sector, I guess, how do you explain it to them, or how would you define it personally, impact investing?
So broadly, impact investing can be understood by almost anyone because it is investing, putting money to work behind funds and companies that deliver measurable positive outcomes for either society or for the climate. We've seen complete transformations of the lives of people. But I think it's worth just saying that there are quite a wide range of positive social or climate outcomes you could pursue. There are now what are called the IRIS metrics, which we helped start because we helped start the Global Impact Investing Network that then developed these metrics and drew on LeapFrog for our metrics, for the development of the overall industry's metrics. And there are a wide array of things you can accomplish. So you could accomplish something in financial services. So people having savings or pensions or getting credit to run their business. You could accomplish it in healthcare by getting medication or medical services. You could accomplish it in climate, for instance, by getting an electric vehicle that is cheaper and cleaner and better, or getting inexpensive energy that is also cleaner, that doesn't have the child and the family in the household having black walls from kerosene and taking in these horrible outcomes. Or it could be, obviously, education, that a kid gets a better education or an education at all. So these are the kinds of areas. The important thing in impact investing is that you are intentional, that you define that intention up front. You don't rationalize it afterwards, but you define it up front and you work on it all the way through the cycle of an investment, right from the inception and your theory of change through to your exit, which needs to be responsible. So you're not selling it to some bad actor, for example. And one of the things we did along the way is we helped develop the operating principles for impact management, which I launched in Bali with the World Bank president, because it's something I'm very passionate about. So he and me and the CEO of the International Finance Corporation and the chairman of UBS launched this eventually. But today there are over 100 sophisticated managers managing trillions of dollars who are committed to the operating principles. And essentially, these track an investment through the life cycle, or a fund through the life cycle, right from what your intentions are, the impact you're going to have up front. I'm going to reach X number of kids with education services, for example, right through to exit. I sold it to a good investor who's taking it on to the next level, and this is best for the staff of the company, it's best for the shareholders, and it's best for the people who are served by the company. And what's very important now is that people can be measured and benchmarked against that. So if someone says, I'm an impact investor, you don't want to be doing impact washing or greenwashing. You also want to differentiate those who are great from those who just meet the minimum. So there are 9 principles. And the wonderful thing now is there's independent audit. So there are actually institutions that exist to audit it, and you can be audited by Ernst & Young or PwC or one of the big 4 as well, for meeting those principles. Now, there are only 12 managers on the global leaderboard that have perfect scores across all of those principles. LeapFrog is one of them, but others are really now competing to get onto that leaderboard. And they're saying, well, we're okay on principle 5 and 6 and 7. We're exceptional on 1 and 2. We have yet to, and this is where we are. And what's wonderful about that and having that independently verified is now you can have a race to the top. And you have that race to the top in financial returns. People are trying to say, yeah, look how well we did. We got 3x on this and 5x on that and so on, right? But you haven't historically had a race to the top on impact. And now there's the opportunity to do that both with defined and agreed global metrics and with how good your processes are across the entire deal cycle for delivering on those metrics. And now the super cool thing is that there's benchmarking. You're starting to have big players in the investing world that benchmark everyone from Blackstone down to small venture capital funds against various norms, right? And you can now have that in the impact space as well. So investors are starting to be able to go and say, I want a top tier manager in both financial returns and in impact. This is what it means. And I'm going to pick them out based on these benchmarks. And that for me is why the industry now, after 18 years of working on this myself, why the industry going from zero is now getting into the trillions and why it's going to consume a large part of the capital markets. And by the way, it's worth saying, it's not woolly like some parts of ESG. When I'm talking about impact metrics, okay, if we're talking about insurance, we're talking about combined ratios and renewal ratios that actuaries can track. In other words, how much of the pool goes back to the insured? How much do people come back and buy your product again? Because if they don't see much social value in it to them, they're unlikely to come back and buy the product. These are things you can track in a highly disciplined way, and where any insurer, for example, should be tracking these metrics very carefully for financial and risk reasons as well as for impact reasons. So actually, our measurement system is called FIRM, FIIRM, Financial, Impact, Innovation, and Risk Management. And we look at metrics like combined ratios and renewal ratios. We look at these tough, rigorous metrics that speak to all of these indicators, where you can actually embed it in what the company pursues and in the compensation of the management teams of the companies, because it helps generate superior risk-adjusted returns as well as those impact outcomes together. And so that's super cool because it's profit with purpose. It's working at the interface, literally with the customer. Profit and purpose are meeting at the customer. Every customer becomes part of the revenue line and contributes to the profit line ultimately. And every customer is a person served with an essential service by a LeapFrog company. And so when we say LeapFrog companies have reached over 500 million people with essential services, that's what we're talking about. It's actually not only important from a social standpoint, but wow, that is super exciting from a financial standpoint. You know, who else has done that? Well, Unilever, Alibaba, maybe Amazon and Walmart. But, you know, you're talking at a scale that commercially is incredibly exciting as well.
You mentioned one of my favorite things to talk about, and that's companies. And I know, look, you've had so many that LeapFrog has their imprint on, and so I don't want to call them favorites, but maybe just talk about maybe one from, you know, the three sort of pillars LeapFrog is finance, healthcare, and climate. Maybe touch on one or two from each of those sectors to give an idea of when we talk about impact. We say, okay, we invest in the company, but then this company does X, Y, Z, and these are the outcomes.
Sure. Well, I'm actually just back from India, so I can give you a few examples.
Nice.
Maybe from India and maybe one from Africa, because people think you can't do amazing business there, but actually you can. I'm just back from Mumbai, where I was standing at the depot of one of our companies called Battery Smart that provides batteries to electric vehicles. Now, the cool thing about battery as a service is that when someone buys that 2 or 3 wheel vehicle, and of course in India, you know, millions of these are sold each year, and it's the predominant form of transport, the auto rickshaw or the scooter or the motorbike. When someone buys that electric vehicle, it's actually 30% cheaper than buying one with a petrol engine, because you've taken the petrol engine, the gas engine out, and you've taken the battery out. So it lowers the expense the upfront expense hugely, so people can get access to these vehicles much more easily, and you can be further down the income pyramid. So you can get access, and then you can become a gig worker. You can go be delivering packages for Zomato, or being a driver for folks, getting them from one place to another, right? So the cool thing is, first of all, much cheaper to get into the game. Secondly, I was standing there and watching this giant petroleum business across the road with probably 50 times the rent of our little depot. And people were lining up for a half an hour to an hour to fill up their vehicles, because Mumbai is a very dense place, right? Fill up their vehicles. They lose an hour on the road or half an hour twice a day. So that's productive time lost from their day where they could be making money for their families and for their, small business. Meanwhile, ours, I'm standing there and the guy pulls up on the motorbike, hops out, lifts the back of the seat up, pulls out the battery, drops it on the ground, scans with his phone another battery, picks it up, pops it in the bike, clicks it in, closes the lid, and leaves in less than a minute.
Wow.
And is on with their economic activity. And by the way, that battery, to get the new battery is cheaper than to fill up with the gas. So you're making the whole thing cheaper, better, cleaner for the customer. Why wouldn't they do it? And basically 1.4 billion people in India, dwarfing the US, Australia, and Europe put together. And that country is going electric. Finish, it's done. It's just superior. From a pure, you can be right wing or left wing, you don't care. It's a purely superior customer proposition. And I can give you the example from Africa. We bought a small chain of pharmacies in Kenya. Now, Kenya is in the East Africa region, about 160 million people in that region. So it's a pretty big market. We bought a small chain of pharmacies, 19 pharmacies. And essentially what we saw is the government reporting, the health ministry, that 30% of medications in Kenya sold out of pharmacies are fake, placebo, or misprescribed. Okay, so that means
30%.
if your kid gets diagnosed, or your grandmother, they have a 1/3 chance of either being not treated or probably getting sicker from the medication and potentially even poisoned because it's the wrong medication. So this is a really serious matter. Imagine you walking into a pharmacy with a 1 in 3 chance for your kid, right? That it's wrong like that. So took over this pharmacy group, bought a large majority of it, put in a management team that included folks from Boots in the Netherlands and the like, built out a supply chain that was incredibly rigorous, Johnson & Johnson and other major brands that carefully tracked, trained the people at the front that are serving people, the pharmacists and the techs that are serving people. And we took this business and rolled it out to 150 health hubs. You can now get that serve millions of people. You can now get nutritional advice. You can get path labs taking your bloods or your samples. You can get a whole lot of these kinds of things. And there's even a little telemedicine room where you can talk to a doctor, where if you're a few hundred miles from the capital, you can, instead of taking the day and losing a day of income and the cost of transport and everything, you can instantly talk to a doctor and find out in 10% of cases you need to go to the hospital. And in 90% of cases, this is the medicine you need, just like we during COVID all had our medication prescribed online, right? So the super cool thing now is that the medication, because we've reached such scale, as an institution, it's called Good Life Pharmacies. Because it's reached that scale, it gets buying power is everything in pharmacies. So it gets the medication much cheaper than your average pharmacy. So you can get a cheaper service. The medication, you can have high confidence that basically there's 100% confidence to the same extent as if you're in London or New York or Sydney, that you're going to get the right medication. You can get a wider array of services. And then we introduced a loyalty program and delivery, because labor is low cost, where anywhere in Kenya, you can get your medication delivered within 3 hours. Now, that is not the case in the US or in Europe. So it's a superior product, not just to what's available in market, but to what's available for high-income people in developed countries. And who bought into that company? Europharma, which are part of the Toyota group. and are scaling that now with us massively. So it's been great for our investors. It's been great for the company because it's grown so much. It's many, many times bigger than it was. And it's been great for the consumers of Kenya. And literally, some of that medication is life-saving. You are saving and changing lives on a daily basis at massive scale, solving a fundamental social problem. So this is the kind of thing, again, where at the customer, profit meets purpose, and the proposition is just undeniable. And there are so many more in developing countries, in emerging markets, there are so many more disruptive propositions like that. It's not a better app for the same thing. It's
Yeah,
something where it's really a poor service being delivered and hundreds of millions of people that could benefit if you get the service right.
I love it because it's at the foundational layer of a society, of an economy. These are the hard things to innovate and get right. But when they do, obviously it takes capital to do so, but it also takes the right capital to do so, because another capital allocator could have came in and did the same thing and just expanded the same team and the same processes, same protocols that were there before, and just made the problem worse, but it might have made more money, right, for that. And so it's the hard, very, very hard things to do that's going to take the capital, but it takes the right investors and a little bit of patient capital to rebuild these infrastructure layers, let's say, of society.
It's worth saying we go way beyond capital in terms of what we provide. So we have data analytics, and obviously with over 500 million people reached, we have some amazing data on what works for men or women, smartphone or brick phone, health or climate or financial services. We're really able to provide our companies with incredible capability in that area. We then have a CX team that really looks at the customer experience and tries to track the customer journey within for companies so that they can deliver a superior product to what's out there. We have a talent accelerator that helps companies build out their teams. And so actually and then we have, our impact team that helps with the metrics and what you aim for being so important, because what you measure, you can manage. So these are the kinds of capabilities that LeapFrog brings to bear on our companies. And it's why someone who might not arrive with an impact understanding, no matter how sharp-elbowed, ruthless, smart in capital allocation, whatever they are, is not going to produce as good a financial return or as good a risk management as we are able to provide for our LPs. So I think that is a really fundamental thing to understand. And the technology has been super helpful, obviously, because when you have smartphones and unique identifiers, for example, in India, or everybody has a bank account that's been opened now, and there aren't 5 middlemen intermediating between a payment from the government and the grandmother receiving that payment. Ultimately, there's just instant transfer into her account. When you have that kind of situation, you just have such disruptive potential, because companies can interface directly with companies, with customers very inexpensively. And that just adds a huge ability to reach those people. You can sell an insurance policy for $1 or $2 or $3 a month for healthcare for the entire family.
Incredible.
In a way that you couldn't if the person was going door to door, having to do this in person without a proper payments and collections and claims payment system, right? So that is actually a practical example. You asked for another example. We worked with the Mahindra Group, which is one of the biggest and highest ROE conglomerates in India, to invest. We invested in their insurance business called Mahindra Insurance Brokers Limited, and we grew it with them into the 3rd largest insurance broker in India. And how we did that was exactly this way. We redesigned the product to be highly digital. We got them to reach millions of people through that digital architecture. We used some of the Mahindra branches to make it a bit more phygital with a physical presence. But really, it was a digital proposition of a quality product. And then we introduced a healthcare product that we had actually pioneered in Ghana, believe it or not, into the system. And because it's Mahindra with this broad reach, they managed to quite quickly reach 2 million people with the health insurance product that allows people to pay as little as 70 cents a month to have the family covered in the case of hospitalization of any member of the family. And that is actually a profitable product that was then added to the suite of what was provided.
Yeah.
Now, you may say, that's crazy, 70 cents or $3 a month, like that doesn't sound feasible. But think about it. If you end up serving 10 million people at an average of $2 a month, that's $20 million a month. That's $240 million a year. No one thinks that's small revenue, right? So even if you're taking a relatively small margin on that, that's a lot of profit you can be generating. And that's just something that could be the adjacency of a business that was already providing other kinds of insurance to its customers. So I think one of the myths we really need to dispel is that this is all like small and sweet and soft and social and beautiful, right? This is not what we are talking about. We are talking about world-class companies raising, serving millions and tens of millions of customers, raising hundreds of millions of dollars. We have unicorns where the companies are worth into the, well past $1 billion. We have, some of the most sophisticated investors in the world, Accel, TCV, Kostler Ventures, etc., are my co-investors with LeapFrog. We've sold our companies to Prudential, PLC, to Allianz, to Swiss Re, to Fidelity, to Standard Chartered. You're talking about to Toyota Group, ultimate companies. You're talking about some of the biggest and most sophisticated companies in the world buying our companies because of the revenues, the profits, the innovation, the impact that they are having. And so I think we really need to, this is not your grandmother's concept of impact or a CEO from 50 years ago. This is serious business, and that's why it's moving into the trillions, and why some of the biggest groups in the world, the biggest private equity groups, the biggest asset managers in the world are starting to pile into impact because they're seeing it as a highly defensible commercial space as well as feeling good about it.
Why do you think it took so long? Because when I listen to, albeit mostly, American or North American sort of investors, they, speak the same language and always, talk about, total addressable market and all these different things. And I'm like, the total addressable market for Africa and Asia it's not even compared. You might be, talking about a different planet. It's so much larger. And so and it might just be because maybe the VC mindset maybe was not exported yet, going to, or just the U.S. investor mindset was not sort of, I don't know, exported across the world until the last 15, 20 years, because it seemed a bit. I remember when you probably remember this, when M-Pesa came out. It was at Kenya. It was sort of this like digital, basically money transfer, right? Which Venmo, right? But this was 15 years ago, maybe. And it was like you could see it, a little bit of the breadcrumbs there of just like what's going to happen, because everybody has a cell phone, and you got billions of people who have cell phones. I mean, that is, at some level, it's going to be a customer eventually. It's some part of the economy. What do you think maybe took so long? And maybe because it was so hard, and every country in Africa has different governments, they have different laws. It is, I think, difficult to maybe assess the market there than it would be where obviously your sort of home area, home region, to go in there and kind of put that same cap on and have the same success. And maybe that's what it was. It was just maybe too difficult to maybe start from scratch for a lot of Western investors. But I just want to get your thoughts on that.
I think you made a lot of profound points there about why it's taken so long for investors who often have a domestic bias, who are in the wealthy North or Western countries, to really invest in the space properly. And so one element is unfamiliarity, certainly, but there is also this notion of paradigms, right? People assumed that the place to invest that would be exciting would be developed markets because, here was Amazon, or here was, and then maybe they could extend their mindset to China because they saw Alibaba or Tencent, right? But once people started seeing the potential, they realized, a lot of people, how misconceived their allocations were. Because as you say, and LeapFrog is built around this idea, there are emerging consumers, and they do constitute 4 to 5 billion of the world's population. So the majority of humanity, the majority of potential customers out there, and increasingly the majority of actual customers out there. So, and the second thing is these countries are typically growing vastly faster. So India, Vietnam, 6-8% a year. And you're talking about a country where, say, 200 million people live, or 1.4 billion people live. So that's a lot of growth in that time frame. And the likes of India has also gone from being, when I started, like the 16th largest country in the
number
economy,
3, right?
To number 3 next year.
It's unbelievable.
It's France and the UK, and it's soon LeapFrog Japan. So this is a whole new world.
It's a very underreported story, I feel like.
Yeah, it is. And the other thing that is misunderstood is people think this is about exporting as you say, the Western mindset to these developing countries. But actually, many of the innovations in these countries are far superior to what exists. You used the M-Pesa example. I spoke about Battery Smart, where battery swapping is just super smart. Why would you spend long periods pumping gas and have all the risks and the issues and the costs around that, when you could just have, like, you could drive in and a little electric arm comes out, pulls out your current battery, pops in another battery, and 30 seconds later, you've gone off to a faster, better, cleaner car. Really, it makes Tesla look so old school, let alone the gas engine powered cars. So these are just examples, but where our name is literally embodies that. The idea of leapfrogging, where a number of these countries have not had the same legacy infrastructure, for instance, in healthcare in the US, that allows them to really leapfrog to this completely new stage of development that in many ways can be superior to what is offered in the developed world, and not weighed down by all the costs and baggage of what's offered in the developed world. And if you're an investor, wow, that presents just an immense opportunity. Don't get into this, company that is just constantly wading through sludge to improve healthcare in the US. Like, get into a company in India or in Vietnam that is growing at 50% a year, with a population that really wants it, where regulation is limited. It's there, but it's limited, and it doesn't weigh you down quite as much. And where customers are going to really develop early loyalty to your product, and the speed of innovation is going to be much quicker. Of course you should do that. So I've seen that again so many times. A number of my partners, we were in Mumbai together, we're ordering lab tests from Redcliffe Labs, which is one of our companies in our new wealth and health fund. And essentially, instead of, the whole thing in Sydney or London or New York of making an appointment with your doctor, going to see your doctor, getting your script, walking with the piece of paper, to now the lab, getting an appointment, having to sit in line, and then waiting 3 days for the thing. Like, that's what you face. Here, you sign up in 1 minute online, you press a button, someone comes to your office or your home within an hour to take your blood. They leave. 3 hours later, full tests provided, and you can get a doctor's analysis of that test. So why wouldn't you do that? And why wouldn't you get behind a company that's doing that in a country with 1.4 billion people? Or do you want to try and improve the whole healthcare system so it can all be more efficient for a company in the US, and take years and years to do that and see it weighed down? So really, I'm trying to shift people's mindsets so that they see the opportunity. Yes, it's further away from them. Yes, there's more that's unfamiliar that they need to learn. But that's where you want to invest. You want to invest behind what's truly disruptive. And right now, emerging markets and tech in emerging markets is vastly more disruptive even than it is in the developed markets.
I'll end on the last question here, but bear with me a little bit. I'm going to read a little bit so there's a little bit of color on the last question. So LeapFrog Fund 4 just raised a little over $1 billion with a B, and some of the investors within this latest fund include Temasek, which is one of Asia's largest investors out of Singapore, Prudential Financial, the European Investment Bank, U.S. International Development Finance Corporation, Mitsui Trust Bank, Eli Lilly, the Ford Foundation, the IKEA Foundation. These, like you said, going back before, you don't have to almost. I'm sure there's a lot. There's some pitch you have to do. But there's no way there's 95% no's anymore. I'm sure there's people that are trying to get in here that can't get in the fund. And so I guess my last question would be is, over the next maybe 5 years, 10 years or so, let's say, what are some of the goals and successes you and the team would like to achieve now? Because I imagine that they've sort of vastly changed from Fund 1 to Fund 4 now.
Well, thanks. That's a great and kind question. Yeah, we were very happy to raise that over $1 billion for the fund and its co-invest. And we're so lucky and privileged to have investors like Temasek and Prudential, each of whom have committed $500 million plus to LeapFrog. Also, the likes of AIA, one of the largest insurers in Asia with trillions under management, has committed hundreds of millions to us. And we've had long-standing support from the likes of the European Investment Bank or the IFC, part of the World Bank, through many funds. So we're seeing these as repeat investors, people who are having a really positive experience of both profit and purpose from LeapFrog. And we're really working on ensuring we have those platinum partnerships as well as new investors to carry us to a new stage of growth and a new stage of scale. Why do we do it, though? We do it because we want profit with purpose to be a business norm, and we think that that is possible, and we think the world would look very different. You'll get superior risk-adjusted returns for investors, and that ultimately includes pensioners who have their money with these big institutions. But you will also get companies that serve real human needs in a fundamental way in important places where they need to be served. And we'll live in a much better world and a much safer planet if we get this done. And so LeapFrog thinks of itself as the exemplar of profit with purpose, that you can get these returns and risk-adjusted returns, and you can get great outcomes that you can feel good about as an investor, as a company leader, and ultimately as a customer. What do we want to do? Well, by the end of this decade, we want to have reached 1 billion low-income people with essential services. And through that demonstration, we want to have encouraged others to reach the full 4 to 5 billion emerging consumers with essential services, with an array of essential services, so that those billions of people have safety nets and springboards, that they can rise into economic and climate security permanently. And that will see a very different world. That will see a world in which, from the bottom up, you have very superior economies that are both more successful and high growth, as well as more inclusive and effective in terms of serving the population. So it's a really inspiring mission for us on a daily basis. We get up excited by that. In order to do that, we've been alongside LeapFrog co-building really the infrastructure for the industry. So the metrics for the industry, the institutional bodies for the industry, the measures, the supporting the independent auditors, supporting the benchmarking, just ensuring that there is an industry that allows sophisticated investors to get behind this, so that in the capital markets, we go from 1.5 trillion to, at one point, the IFC said this could be 26 trillion committed to impact. This could be a large part in the not so distant future of the capital markets, where every single major LP will feel a need to have exposure to this in the same way they feel a need to have exposure to alternatives or listed equities. This is something also that can apply across those strategies. You should be doing impact in your listed equities. You should be doing impact in your alternatives. You should be doing private debt and private equity and VC. That is impact in all of those areas. If we can do that, then we have really fundamentally transformed the structure of capitalism with the logic of capitalism. So it's not transformed the logic because we're all going to, stand around in a circle and hug some trees and some bunnies. It really is that we've provided a superior way to do capitalism because it involves more customers, better service to those customers, higher growth companies that are better managed, that are delivering better for investors. So whether you're on the right or the left, you can be anywhere in the political spectrum, you can get behind this because it's empowering for a large group of people, and it really makes capitalism work significantly better for everyone. So that is the ultimate vision of which we want to be the exemplar of profit with purpose, but also enable others to engage in this in a very powerful way. And that's why I wear two hats. My one hat is as the CEO, founder of LeapFrog, but my other hat is as a co-builder, a co-founder of an industry that really shows investors and company leaders and others in the world how to go forward as they act and as they build out their companies, their funds, their institutions. And I'm really excited to see what that develops into now, because once you have the trillions, you really see so much innovation, so much transformation. And these billions of people who have been excluded from the economy don't have time to wait. They actually can contribute. That talent pool can transform our worlds. How many other Sundars, Pichais, how many others are going to come out of the education and the opportunity that's provided in India, in Vietnam, in Nigeria, in Brazil, that will transform all our lives for the better? That's really exciting to think about. We haven't even begun to see the change that this form of capitalism will produce for all of us, and it's coming to every one of us.
This has been an honor. It's been a pleasure. Thank you for all you've done. Thank you for what you and the team have done. I know it takes a special group of people to continue to deliver on a lot of this stuff. A lot of people can talk it. You and the team and LeapFrog have been walking it for a long time. And so best of luck for the next couple decades for you and the team. Thanks so much for taking the time.
Thanks, Grant. And I think we've just turned 18, so we're an adult. The teenage years were pretty good, but I think the best is yet to come, including for the industry, which is about to enter its adulthood. So watch the space.